Okay. Hey, everybody. Dan Fitzpatrick here, stockmarketmentor.com. And I want to go through Microsoft today, and then we'll look at Meta, which you'll want to look at tomorrow. So Microsoft reports some pretty strong earnings, and the stock gaps up. This is what a lot of people will do. Stock will gap up first thing in the morning, and a lot of the retail folks will say, wow, I want to be first in line to buy the stock. So I'm going to go ahead and place a market order. I just want to get this stock before it goes up to 350. And this is invariably what happens. The stock opens up really, really high. And why is that? Because there's a lot of demand. And if anybody's going to sell the stock, they're going to sell it at a really high price. They're going to go like, hey, man, you might want to buy it at 294. But I'm only going to sell it to you at 296 or 297. And so that's why the stock opens up so high. And it's always better rather than if you really, really want to, you get what I call the can't help it's, you just got to own this stock. If you got to buy a stock that's up this much, wait, let the stock do what it's going to do. Now, if it were to keep on moving up, then sure, go ahead and buy it. And you got your stop right there. There's your trade. You just keep on doing that. However, if it doesn't do that, and most times it won't, then you're best to wait. You just wait on the stock to come back and fall here. In this case, it fell quite a bit, about 1.5 points or something, almost 1.5 points between where it opened and where it ultimately bottomed out and then started to move higher. So the stock does this, gaps up, comes back down, finally starts trading above the VWAP, which typically actually kind of doesn't happen on something like this. A lot of times, especially in a heavy market like this is, the stock will just continue to go lower or just kind of meander sideways. On this time frame, the stock instead bucked that trend and kept moving higher. And so you'd have been better off waiting. Now, let's look at this, though, on a different time frame. On an hourly time frame, you can see this is just kind of a mess where it's been effectively trading sideways. It's just not that much different. It's a little lower than the open. So all things considered, if the market were to stop trading right now, this would actually be advantage bears. And the reason I say that is because I'm not looking at where the stock was yesterday. I couldn't give a darn where the stock was yesterday. Because that was pre-earnings. What I care about is where is the stock trading now that earnings are in the bag? Now that earnings are finally released and the market is trading on that new information, what are we doing? What do we got going here? And what I'm seeing here is that relative to the open, which is the first print, the first post-earnings print right here, relative to this level, the stock is lower. And so I'm looking at this and I think, okay, this could, I think this is probably going to continue lower. That's where I see it on the VWAP. And so one of the things, what we did on Option Market Mentor, and by the way, if you haven't subscribed, you ought to, what we did was placed a bear call spread. My bet is that the stock stays below 300 or certainly 305. And so we sold the 305 and then bought the 315 calls as a hedge, as insurance. And that's our trade for Microsoft as far as how we're playing this. And so I think this trade's going to work, should work pretty well. We're just going to have to give it a few days. But the moral of this story, boys and girls, is don't buy gaps like this. You're very rarely going to make good money. At best, you'll kind of be flat, where you've took a bunch of risk and you're not getting a reward for it. And right now, that's what's happening here. So anyway, that's all I got for you. Hope you all are having a good day and a good night and a good weekend, and goodbye.